Hi, Sam, Alex, and Magdala. How are you doing? My name is Ting, Head of Communication of Cointelegraph China, one of the fastest growing blockchain media companies in Greater China. I'm very excited to host this panel and pick up brains about why decentralized exchanges are growing in popularity. You guys have fascinating backgrounds as entrepreneurs and pioneers in the crypto space. Would you please first share a bit about your journey and what was your vision when you started your project or got into the crypto space? Alex, could you go first?
Yeah, thanks for having me. Thanks to LA Blockchain Summit for hosting this. Excited to talk a little bit about DEXs and everything that's been going on recently. My name is Alex Wearn. I'm co-founder and CEO of IDEX. I spent my career in software development roles at Amazon, Adobe, IBM. Got into crypto full time in fall of 2017 with the launch of IDEX. It's a decentralized exchange operating on Ethereum, one of the most successful in terms of users with over 300,000 users. Over 3 billion traded. And we're currently working on a new version that we're going to be deploying in a couple of weeks that combines the performance of centralized exchanges with the security of a decentralized exchange. And that's really what excites me about the space is, we were trading early on. We actually lost some funds on Mt. Gox. And since then, we've been trying to figure out how can we solve that issue of centralized custody while still giving users a fantastic user experience that they know and love. And so that's what drives us here at IDEX.
Great, thank you. Magdala, what was it like when you first got into the space?
Yeah, thank you for having me here too. So when I got here in like full time in the Bitcoin space, it was 2018, right after all the boom, of the ICOs 2017. And I started at Paxful as the LATAM manager. We didn't have any operation at Paxful. So for you guys that don't know what Paxful is, it's a peer-to-peer marketplace for Bitcoin. So people can buy and sell directly from each other Bitcoin. And I was looking for different options because I had to send money to my family in Mexico all this time, and while I was living here in the US, so I had to send money, and Bitcoin was the tool that I used, and that's why I got into cryptocurrencies, like looking through different use cases of Bitcoin. So now I'm here. We're rapidly growing in LATAM and globally. We have more than 4 million users all over the globe, and we traded more than 33 billion last year. So yeah, we're really growing really fast, and we're seeing this like growing adoption too in the crypto space.
Very nice. Thank you for sharing that wonderful story. Sam, I know you were, yeah.
My name is Sam Bankman-Fried. I'm the CEO of FTX, which is a global crypto derivatives exchange. And recently I've been spearheading Project Serum, which is a DeFi ecosystem built on Solana. I guess in terms of my background, I was a trader at Jane Street Capital on Wall Street before this, and got into crypto in 2017.
Okay, and Alex, Sam, your project is decentralized application exchanges, and FTX is one of the biggest names out there. One of the biggest names out there. And today we're talking about decentralized exchange. Why is it growing popularity now? You started at the very beginning years ago, and why is it gaining attraction now? And how much is decentralized finance playing a big role in this popularity growth?
Yeah, sure.
No, go for it.
Sorry. I'll jump in. So I think decentralized exchanges have been going through technology, kind of solving technology problems over time that are starting to make them more user-friendly. That includes finding new innovative models for market making, like the AMM pools of Unisawp, building on faster chains like Serum and Solana, or hybrid models like IDEX that seek to separate trade execution from the blockchain custody and settlement. So I think that's a big part of it, is people are starting to figure out models that are working. In terms of this most recent round of excitement and enthusiasm, I think it's primarily been driven by speculation and two pieces that have fueled it, which is permissionless listing. So the ability for anyone to list an asset and create a Unisawp pool, and then the yield farming that was layered on top of it. The idea that you can incentivize people to provide liquidity by airdropping them new tokens from these projects. And so it's kind of, in many ways, it parallels the ICO boom, where you have a whole host of new assets being issued. A lot of them are genuine projects. Many of them will stick around, but you also have some scams, some outright bad actors trying to take advantage of it. So anytime you have kind of a new fundamental innovation like the ICO was, or like this permissionless listing and liquidity mining, I think you're going to see this explosion of activity. And that, in my opinion, is what's primarily been driving the recent surge of DEXs. What's exciting for me is moving post that and seeing how we can create these to be more sustainable key parts of the cryptocurrency exchange ecosystem.
Mm-hmm. Is IDEX one of those permissionless exchanges as well?
Actually, we're not. So without going into too much detail, we have a hybrid design where for a whole host of reasons, we don't think that we can or should offer permissionless listing. So our focus is really on markets that have been more well established. Think ETH stablecoins, top Ethereum assets, providing deep liquidity in a way that users can trade them without having to worry about centralized custody.
Got it. And Sam, what you were going to comment earlier?
Oh yeah, I to some extent, I just want to echo a lot of what Alex said. I think I agree with a lot of it. I guess just like a few other things to add is that you sort of ask, like, why now? What changed? What happened? And I basically think it's just sort of like momentum and memes and an accident, and which isn't to say that I think DeFi never should have popped. I think it's more like it was probably going to happen sometime, and like there's this question of when, and I don't know, why was it now? Compound launched, they had a really successful launch. They kind of accidentally ended up in a place where they were strongly incentivizing. They're sort of the first giant yield farm, because their token price went up a lot, and all of a sudden, like, their parameters made no sense from like what they're thinking before, and instead it was like a very, very heavily incentivized, and then that just got a ton of volume, and then everyone else started copying it, and you just got this like runaway growth driven. And I think it's like, yeah, just sort of a little bit of a coincidence that like now is when it happened. But once it started, everyone just started copying what everyone else was doing, and pretty soon that was all crypto was talking about.
Yeah,
Okay,
I
interesting.
want to comment into that too. Like, I think also like the current pandemic crisis also boosted the interest as people were looking into alternatives to access different financial assets, instruments, and like how people were like, at least like in Latin America or like even here, people were like looking for different ways to make money. And that's how a lot of people started to like jump into Bitcoin, now decentralized exchanges and products too, and they love it because of the same reason they love BTC, right? Because like there is no need of a third party, they have control over their funds, all that. That's really it's welcoming for the crypto community. Like we love that aspect.
Mm-hmm. As for your project, it's more of a platform for trading BTC. And in May, we've seen the amount of BTC on Ethereum and has surpassed the amount of the BTC on the Lightning network, and because of the scaling, technology out there. So what is Paxful, taken on this, and is the CEO of Paxful Maximus with Bitcoin? What's his view, or what's your view on this?
Yeah, we're seeing this like massive like interest in DeFi products, all that. So we're exploring into seeing like, okay, how we can adapt and how we can introduce different products. Right now, we just added USDT in the platform. Before it was purely BTC. You could only trade BTC. We saw the growth in interest in USDT and Ethereum-based project. and we added USDT was like just a decision we decided to add it because of the adoption levels it has, and we've had a lot of like interest from our users. You know, it has different use cases as BTC. A lot of our users just use them to like protect their funds, their money from inflation, all that. So definitely we're exploring different aspects as lending too, as a peer-to-peer platform. Peer-to-peer lending in decentralized exchanges is huge. So we're exploring different things. It's still nothing yet concrete, just the USDT that we added because we're seeing a growth in interest in that kind of products.
Okay. What's the daily volumes like on decentralized exchanges these days? Alex?
Yeah, last I checked, it was still hundreds of millions. Mostly Unisawp, Curve is also in Balancer doing pretty well. I think it's interesting that so far AMMs have really been dominating. I think that speaks to their kind of creative solution to dealing with latency of trying to put an order book on a blockchain. It basically just doesn't work very well if market makers have to update orders frequently and pay a network fee every time they do. And the AMM model kind of flipped it on its head and also allowed retail to easily provide liquidity. So I think you'll see the growth of order book exchanges is going to catch up as different technological solutions come online. One other thing kind of maybe worth mentioning is the volume on DEXs is still very much long tail assets. And by that, I mean, not your top 10 cryptos, either because those are more liquid on centralized exchanges or because they don't natively or easily integrate with DEXs. So I think there's still a lot of work to be done. You've got solutions like Wrapped Bitcoin, which is hopefully just a bridge to a technologically trustless version where users don't have to rely on a custodian like BitGo. So I think that all of those are going to continue to help grow and increase DEX volume kind of going forward.
Mm-hmm. So talking about automated market makers, and one of those trends for decentralized exchanges, what are some of the other new trends out there that could push the volume to go up even in the future? Sam, would you like to comment on that?
Yeah, so I mean, I think that like right now most of the volume's bullshit. It's like most of the volume that you see in DeFi is just subsidized. Like this is transmining 2.0. And like we saw what happened with transmining 1.0, right? Like the incentives go away and all the volume goes away. And I think that's like my best guess about what would happen here, at least to a decent fraction of it. And so what's the future look like? I mean, I think we need to solve sort of the problems that never got solved in the first place. And I think that like there are a lot of sort of mediocre solutions to it, but like, I think that in order for DeFi to really have a life of its own, and to be able to sort of sustainably scale without heavy incentivization, it has to have a way better user experience. And like, I think going to a much faster chain is like one example of that. And if you use like Ethereum order book right now, it like feels kind of like a centralized exchange. Like it's fast, it's cheap, it's responsive. You could use a layer 2. You could do a hybrid solution like what Alex is doing. And there are obviously pros and cons to each of these. I like the layer 1 solution because it's a thing that gives you the most composability, but there are sort of like pros and cons of different answers here. But like scaling was never actually solved. The world's just like paying $1 million a day in hyperinflating coins to pretend it isn't there. So and that sort of like can't be sustained forever.
Okay, so layer 2 is not the solution. Well,
I mean, it's not my best guess, but like I do think it's plausible for that ends up being the solution.
Okay, and Magdiela, what's your take on that?
Yeah, I will say, like as I was saying before, like one of the like new trends that we're seeing, at least in Paxful, and because we serve a lot of developing countries in the company, we see like how this can be used really for people to access to finance. Like for example, people in Africa don't have really access to banks or to loans or to credits, and these DeFi tokens, DeFi products are are allowing them to actually access those kind of service that they usually don't have. It's the same in Latin America, for example. So I think that's one of the main like potentials that we can see in DeFi, and that can actually apply and help people globally, like to kind of change the way we see finances, traditional finances. Like, okay, I want a loan in the bank, they won't give it to you because of your credit history, all of that. So it's really easy now to, like, we all are part of the centralized exchanges, the centralized products, so we can just like easily access them. And I think it's really changing how like people's life and people's economy in these like developing countries. I see how that can be potentially useful for these needs that we have.
I see. Just bring the finance to the unbanked in general and bring more users in the future. That could be, yeah, okay. And Alex, what are some of the competitive advantages that you would say that decentralized exchanges, have compared with centralized exchange?
Yeah, I think, there's different flavors of DEX. I think the clear competitive advantage is around the fact that it's non-custodial. And for us, that doesn't necessarily mean self-custody, but that you can choose your custody solution. If you want to trade on a centralized exchange, you're forced to deposit and custody funds with them. There's a variety of use cases or kind of user preferences, from individual private keys and software and hardware wallets to those that are required to use third-party custodians, kind of more managed services like Fireblocks, a whole host of things that users have chosen for a specific reason because of their kind of custody and security preferences. And you have to abandon that when you trade on a centralized exchange. So that's a clear benefit. You also get things like transparency around execution and settlement. It's much harder to do things like wash trading or faking volume because everything has to be on chain. And then you also have composability, which is a lot of what drove the DeFi boom, was these applications being able to integrate with one another. Maybe to touch a little bit on Sam's comment of L2 versus L1, we are ourselves, we kind of think the jury's out on where that, like what's going to be kind of the winning solution. The challenge we see, or maybe the big question, is right now Ethereum is still the dominant game in town. And that's because that's where all of the assets are. I think the ICO boom is an underappreciated kind of event and asset for the Ethereum network, in the sense that it taught everyone how to use MetaMask, understand gas, and now they hold assets of all these projects. And so L2 is kind of the natural extension of that. Take that ecosystem and put it in an environment where you have much better performance and scalability. But to Sam's point, it does make that composability with other applications more difficult, at least in the near term. There's no obvious technical solutions to that kind of breaking composability. So an L1 is a faster L1 is a very attractive solution, but then you have kind of that consensus problem of how do we get everyone to pick the same L1 and all migrate over there, given that the activity and ecosystem is still predominantly on Ethereum. So we're kind of hedging our bets in the sense that we look at ourselves as being chain agnostic. We've got an L2 that we're about to deploy on Ethereum, and we're also looking at other L1s to bring our hybrid design to in the future.
Mm-hmm. We're talking about decentralized exchange today, but is there a correlation between the decentralized exchange and decentralized finance? I know, Sam, that today or yesterday you posted something on Twitter that it looks like you're quite positive about the future of decentralized finance. Would you say you are also positive with where the decentralized exchange would go?
I think I'm bullish about some of them. I think I'm very bearish about others. And I think that, like, what I'd say is that, if you look at the centralized exchange space in crypto and you compare where things were 3 years ago to where they are now, I mean, it's just a world of difference. Like, the sort of improvements that you see are actually just quite large. And you have to keep, you have to keep improving. Like, you can't, you can't get complacent. And I think that, like, when you look at the DEX landscape, it's a hell of a lot worse than centralized exchanges ever were. I mean, it's just like Ethereum cannot host an exchange. Like that is not a sustainable solution, at least not Ethereum as it is now, which isn't to say that ETH 2.0 couldn't, or that an L2 on ETH couldn't. But you know, I think basically I'm pretty bullish on DEXs that really are ambitious and work well and have a goal of being you know, competitive with centralized exchanges on usability, at least for many users. And I'm pretty bearish on DEXs that give up on that. And so I think that, like, you know, how do I feel overall about the space? I think it's overhyped right now. I think it's underhyped maybe, but maybe not relative to where it could eventually be. And I think that, like, you know, the difference between here and there is building better products and getting adoption for them. And I think that, like, you know, we'll see what ends up happening there. And, you know, I don't know what the answer is. And I know what I sort of think is the most powerful. I'm not confident I'm right. And I'm certainly not confident that's what's going to happen. And so, like, I think you get a ton of power by doing things all on an L1 because you get composability there. But it's a lot harder to do that because you do need everyone sort of like stand up and walk over and sit down. And the, you know, the sort of pathway to an L2 is faster, although I think you end up in a less powerful position. And you know, I don't know exactly what's going to end up happening there, but I do think there's a ton of potential for really well-built systems that are designed to scale.
Mm-hmm. So we're running out of time. We have the last few minutes. Why don't we go through the last question, and each one of you will give a comment on what your vision is for decentralized exchange. I mean, Sam, you probably gave your comment on that already. So I'll give the mic to Magdiela and Alex. And so Magdiela, would you like to go first?
Yeah, I think, like, I will agree with what Sam said too. Like, I think, like, yeah, there's a lot of FOMO right now around decentralized exchanges, DeFi. We have to see, like, okay, which of these all new tokens stay. But in general, I think, like, for decentralized exchanges to actually, like, gaining popularity and like kind of take centralized exchanges is what Sam was saying. Like, there has to be a much better user experience. There's like, they have to like serve better the user, right? As centralized exchanges are always like changing, like adapting, all that. So, and another thing I think needs to happen is also, like, the users have to become responsible and capable of doing self-management of their assets. Like, that's something, like, yeah, they have control over their funds, but with that freedom, it also comes a responsibility. And all of us, like, that we're really used in general to, okay, I have a problem, I don't recognize this payment, I call the bank, all that, or like, I cannot access my account, my wallet, I call Coinbase support, something. And with the centralized exchanges, you don't have that. So I think there needs to be a change in how we perceive this, like, how we deal with financial institutions, because we're really used to that. And with the centralized exchanges, we don't have that. And it's like all on the user too. Like, you have to be responsible for that. And as Alex was saying at the beginning, this, like, also allows a lot of scams, a lot of different frauds to happen, and users have to be ready to detect that and to be able to protect themselves from that. So yes, it says, like, decentralized, we are all part of it. We are all the DeFi economy. So we have to be responsible, and I think that have to change in order for that to become really popular, or like the mainstream.
Mm-hmm. I'm curious, to Sam, when you said decentralized exchange, the fundamental issue still exists in terms of scaling, but would that be the case for centralized exchange as well, or not really?
so centralized exchanges have historically doing things in DeFi has meant doing things with your hands tied behind your backs, because rather than getting to use like, you know, AWS or like giant servers or at least like modern hardware, you get like, you know, 1 transaction per minute per protocol. That's like what you get on Ethereum, and you just don't get more, and that never changes. Like that number doesn't go up. And so just like you know, many orders of magnitude difference between the resources that they have. Centralized exchanges both just get to play, you know, with their full capabilities, but also have scale with Moore's law and with you know, everything else. And DEXs haven't. That changes if you change chains. And so part of that's just like a lot of chains are way faster. And again, that might mean ETH 2.0. But also some chains scale with Moore's law. Some chains are, you know, Solana, for instance, is like built to just be as, you know, maximized for efficiency and scale with sort of the world's, you know, cost of compute as well. And so you lose less by doing things on chain in terms of how much throughput you get, you know, compared to a centralized exchange. L2s are another way of doing this, as are hybrid solutions like what IDEX is doing. So there are various things DEXs can do to get more on the same playing field as centralized exchanges there. But there's just been a world of difference historically.
I see. Alex, your final comment on the.
Yeah, sure. So to build on Sam's point, I agree. It's all about UX, in particular for large participants in the markets, market makers and algorithmic traders. Speed and throughput matters. They want guaranteed trade execution. If I submit an order, it's going to go through. I saw something the other day where a top DEX project was bragging about only 7% of orders failing on chain when users submitted them. And I'm like, that is not something to be proud. Like that is, we should have 0%. We should have 0% order failures. And until we get to that point, we can't say that we've really built an exchange. So I am in some ways bearish on the notion itself of a decentralized exchange, because I think exchanges need performance, they need deterministic execution, and the best way to get that is to have one party be doing the matching and trade execution, centralizing the exchange part. That doesn't say you can't get the properties of a decentralized exchange, like non-custodial, you know, being able to have that transparency by doing the right architecture. So I guess I'll close with that. That's what we're really focused on, is keeping that great UX of centralized exchanges, but bringing in those elements of decentralization for our users.
Great. Thank you guys so much for the very interesting conversation, and hope to see you guys again in the future, and enjoy the rest of the summit.